Hey, Bitcoin Wealth Builders, Simon Dixon here, and welcome to episode 84 of Bitcoin Hard Talk. Today, we're going to be going into what everybody is talking about in the macro section, but of course, we're going to be covering everything that happened this week in Bitcoin, this week in macro, this week in geopolitics. And the main theme is obviously going to be Epstein, Musk, and Trump. What's real? We're going to be breaking down everything. Now, you'll be very familiar with the Epstein files and the relation that it has into the geopolitical situation if you're a long-term listener of Bitcoin Hard Talk. But we're going to break it down with everything that's been happening this week. And we're going to go through three different sections, as always. So Bitcoin Hard Talk is hard talk about hard money. And we're going to be breaking down in section 1 today of everything that happened this week in Bitcoin. Now, there are so many public companies. In fact, one of the companies that I invested in many years ago, Circle, went public today. And we had an announcement on the next phase of the Bitcoin strategy for various people in BRICS, particularly Russia. We'll be going through all of that and the implications and how it all fits together. And they're Bitcoin bonds as well. So we have our first Bitcoin bonds at the sovereign level. In part 2, this week in macro, we'll be going through the Epstein side, the Trump side, the Elon side, and the bit that you might have missed about the big, beautiful bill, which is Palantir and your social credit score that's coming through. We'll cover all that and we'll fit it together, and I'll give you my perspective on what I think was happening. Was it shenanigans? Was it acting? Was it a false flag? Was it real? We'll go through the complete breakdown of what I believe as well. And in section 3, this week in geopolitics, we're going to be going through the latest that's happening in the escalation in Gaza, the escalation in Ukraine, the escalation in Syria, and the de-escalation in Yemen, and the narrative that's been happening around Taiwan, how that all fits together into the proof of weapons network, and how we resist and how you opt out and how you boycott with peaceful Bitcoin proof of work. So let's get straight into section 1 this week in Bitcoin. So as I alluded to, there was the long-awaited Circle IPO. So this means that Circle, a company that I invested in many years ago as a private company, and many of the Bank to the Future investors, they are now public on NASDAQ. And in order to go public and become a public company on the stock market, they did a little fundraise, and it was 25x oversubscribed. So this is the initial public offering with institutional investors. And so it was set to be a pretty oversubscribed, which means that the demand for those that wanted to get in can get in on the secondary market once a company goes public. They were selling about $1 billion of a total $7 billion, and it was 25x oversubscribed. So Circle is the issuer behind the USDC stablecoin. And we've been talking about how Genius Act is coming soon. It passed in Congress, and now it moves over to Senate. And stablecoins are looking to be one of the solutions to how to roll over the debt bomb, the debt cycle that America has found itself in, and at the higher rate, so that those stablecoin issuers get significantly more yield so that they can earn more Bitcoin as well. So it's set to be an interesting, and people are paid many times over. In the initial public offering, and it went live yesterday, the stock rose approximately 160% after the initial IPO. So congratulations to all investors. And we'll see where the share price ends up, but it's approximately $100 for the Circle public offering. This was the third one that I've had where I was a private investor and it's gone public. The first one was Coinbase, then Robinhood, now Circle, and we also actually the fourth one was Exodus. So there are more and more companies that our industry is becoming more and more institutionalized, as it were, and people are able to get exposure to the growth of this sector. Now, the one competing with Circle, the largest stablecoin in the industry, is Tether as well. And Tether has made an investment in another public company. It sent approximately $3.8 billion of Bitcoin in order to seed its investment in 21 Capital. 21 Capital is a Bitcoin holding company. And I've been sharing how it is connected to deep state actors. And I'm going to go through some of these public companies and some of these updates. But I don't believe that anybody should be messing around with this junk, quite frankly. It is for a particular type of investor, and it brings more and more buying volume to Bitcoin. But if you've watched any of my previous episodes, I break them up as well if you want to go to it and you missed it. Around one of them was the banks want your Bitcoin. And so I believe that we are setting ourselves up for something that we saw in 2022, but this time at the institutional level. You can go back to that video if you would like to learn more about this whole complex that's being set up to trick you out of your Bitcoin. And while I'm not making accusations at any one actor, 21 Capital is connected to some pretty deep state players like Cantor Fitzgerald, who is a discount broker who's also doing Bitcoin-backed loans. SoftBank, who's able to pull out capital from the Bank of Japan in the Japan carry trade. Cantor Fitzgerald pull out money via the Federal Reserve auctions, and also Tether itself with Jack Mallers as the front person as well. So there was a bunch of announcements around 21 Capital this week. One of them is they decided to, after Bitcoin 2025, when Michael Saylor got so much crap for saying that he won't publish the wallet addresses for MicroStrategy because he'd like to rely upon traditional auditors. Well, 21 Capital decided with Tether to publish their wallet addresses. So you can now see the 5 different wallet addresses to demonstrate that they have the Bitcoin that they say they have. You can see the 42,000 Bitcoin come in from Tether. You can see another wallet address where some comes in from Bitfinex. Full disclosure, I was a investor in the private equity there as well. And you can see money coming in from SoftBank, and you can see money coming in from the private fundraise that they did. And you can check. So they are publishing the wallet addresses, which is how people are starting to distinguish. Now, as I said, I'm sharing what's happening in Bitcoin, but I shared previously how I believe that these public companies on stock markets is not the game that most people should be playing. It gives you Bitcoin exposure, but it adds counterparty risk. And what are these counterparties going to do as they all compete with each other? They're going to find ever new ways of trying to distinguish themselves from others. And therefore, they're going to go further and further down the risk curve as they introduce human problems, counterparty problems, stock market problems, all of these things that can go wrong, as opposed to just simply owning your Bitcoin in a private key. But anyway, 21 Capital, unlike Strategy, has published the wallet addresses, which we call proof of reserves. It's a normal, standard in our industry to do that. We also had them announce that they bought 10,500 additional Bitcoin, which at the time was worth over $1 billion. Bitcoin right now on the Elon news and the Trump news, for some reason had a bit of a correction. It seems to have recovered to a good degree for now. A little bit of irrationality in the short term, maybe some insider trading. But anyway, we also had further announcement from 21 Capital that has raised another $100 million in order to purchase more Bitcoin. And this is now means that public companies that are converting themselves to Bitcoin, treasury companies, which means they're a public company that purchases Bitcoin, and the value of the Bitcoin somewhat underwrites the floor price in terms of a hard asset. In the last quarter or so, they purchased about 95,000 Bitcoin, and they've raised billions more in order to buy. And there is lots of people that are investing in these public companies. It's somewhat become the new ICO. Every year we have these new trends, or every couple of years. Last time it was meme coins. Before that, it was yield on Bitcoin. Before that, it was the initial coin offerings. Before that, it was alternative blockchains. Before that, it was cheaper, faster, better altcoins as alternative to Bitcoin. They all come and go. And they all create these speculative bubbles. And this is the latest one. Some of the people that were investing on the insider stage, they're getting 25x, 15x, 10x returns. And most of them are probably selling those onto people like yourself that didn't have access to those deals, but are coming in later. That's exactly what happened in the initial coin offering phase, as it normalizes to the real value over the long term versus the hype and speculative value. But at the same time, we started to get more and more announcement. There was announcement from a Spanish coffee chain called Vanardi. If you're at Vanardi Coffee, if you're in Spain, you may be familiar with that brand rather. I haven't been to Spain for a while, since pre-COVID. I think last time I went was Valencia. But they're now raising up to $1 billion to take a coffee shop and buy Bitcoin to become a Bitcoin Treasury company. Now, I'm starting to notice a trend here. And that trend is that we're moving to this radically changing world of artificial intelligence, where traditional business models are being disrupted. And one of the strategies is people are somewhat looking to hedge themselves, raise finance, accumulate Bitcoin with the fact that they're a public company, and then that underwrites the price of that company. When they transition to a very disruptive world, they have an asset that can, provide the net asset value of that company, even if they get disrupted. And then they can pivot to being a Bitcoin Treasury company. It's an interesting business model. I'm not talking about you investing in it, but it's very interesting to watch, because public companies attract a certain type of investor, particularly as there are now ETFs, and ETFs have to have exposure to all of these Bitcoin Treasury companies, which means that creates a bid and buy volume. And TradFi will always like to create products out of very simple things like Bitcoin. And MicroStrategy via MicroSaylor has certainly kicked off a wave of these Bitcoin Treasury companies. Speaking of which, the original one, Strategy, it used to be called MicroStrategy, is now Strategy, MSTR. It launched another public offering called STRD. This is basically a new perpetual bond, a new stock that is an initial public offering. And it is to select investors, and it adds some additional exposure onto the cap table, which promises to pay a 10% perpetual dividend in perpetuity, as it does things like monetizing volatility and crazy strategies. Now, what this does is it crowds out volatility and creates all sorts of weird unintended consequences. And I just want you to know that messing around with these things is adding more and more risk to it. Having fiat obligations, when there is a Bitcoin strategy, there is a certain price at which Bitcoin needs to be sold. It is significantly lower at this stage, but as you add more and more products, you end up with a black box which is harder and harder to track and requires ever more sophistication. When we get these, and we always do in Bitcoin, when you get these systemic events that I covered in previous videos and what that looks like. I also this week went on Digital Asset News to discuss this very topic. I think it's coming out this weekend, and I'll make sure I upload it to my YouTube channel. There's a couple of videos that we're going to upload. I did one interview where we went through all the reasons why people don't buy Bitcoin and all the objections, so you can understand whether those are rational or whether you agree with them. We'll get that uploaded. And another one on this whole lending structure and this Bitcoin industrial complex that Wall Street is setting up. and how to kind of understand all the pitfalls. We'll get those up on my YouTube channel next week. Make sure you are a subscriber, hit the bell symbol, hit all, and you will get a notification. This is the third perpetual offering that I'm aware of within the MicroStrategy stack that's offering this 10% guarantee as well, and all the terms that go through it. I haven't done a deep dive into it, but it's I recommend the simple of Bitcoin, where you own the private key for all the reasons that we cover on Bitcoin Hard Talk. Speaking of public companies, Japanese company Metaplanet, they're still continuing. They bought another 1,088 Bitcoin worth approximately $114 million. They now hold 8,888 Bitcoin worth approximately $930 million, approaching the $1 billion mark. For anyone in China, you'll know that the 888 is a very auspicious number as well. Now, what about the very large companies, the Magnificent Seven? Well, Meta, headed up by Mark Zuckerberg, aka Facebook, Instagram, and WhatsApp, their shareholders, they rejected the vote in order to add Bitcoin to Treasury. The way this works is if you are a particular shareholder in Meta, you can file submissions that they have to vote on in the shareholder meeting. They voted on it. And they rejected the idea of buying Bitcoin on the Meta balance sheet. In fact, 95% voted against the proposal. And so this is the traditional investors, including BlackRock. And it's very interesting that they're doing that. Now, it makes sense. I would say as a Magnificent Seven stock, with the AI, with the Meta, all these different things, that they're getting involved in, even the nuclear deals that Meta is now subscribing to in order to rebuild investments in nuclear power plants to get cheaper energy in order to plug into powering all this artificial intelligence with new, nuclear power plants are being built in America. I think it's the perfect synergy to have some Bitcoin mining in there and also have some of that Bitcoin on the balance sheet. But at this stage, the shareholders of those very, very large Magnificent Seven, tech companies in US, they're dead against it at the moment, or their shareholders are anyway. What's happening on the other side of the world? Well, Hong Kong's realtor, one called Logtech, it made an announcement that it will be acquiring $1.5 billion of Bitcoin to add to the balance sheet of its public company as well. We had, meanwhile, in America, politician Vivek Ramaswamy from the Republican Party. His company, his asset managing company, Strive, they're going to be doubling the latest Bitcoin fundraise that they're currently engaged in. They're raising $1.5 billion in order to purchase more Bitcoin. And so now, when you combine this, you've even got publicly traded company, another one, NBX, which upon the announcement of its Bitcoin reserve treasury strategy, it surged 138% after adopting a Bitcoin treasury strategy. So you can see how frothy this is. We now have, from last count, 61 publicly traded companies on NASDAQ and the New York Stock Exchange that hold approximately, by last count, and this is probably outdated by the time we published, 673,897 Bitcoin. That's approximately 3.2% of all the Bitcoin that will ever exist, because there's only ever going to be 21 million Bitcoin. The miners are mining away. They've got another Bitcoin to mine up until 2140, beyond our life, unless we've got some life extending technology. After that, it converts to just a fee model rather than block subsidy. But approximately 20 million Bitcoin have already been mined. Many of them have been lost in the early days, and only a couple of million of them sit on exchanges. And the amount that are available outside of cold wallets that don't move is getting smaller and smaller and smaller as more and more try to buy those Bitcoin, which is this is driving up the price. for the more and more people that want to buy these Bitcoin. And now we've got this Treasury strategy that is starting to get real steam. Again, I'm not saying invest in these public companies. If you want to play around with that game, I like the simple things that everyone can do. And I like it in self-custody, because then you get to boycott the Federal Reserve. Rather than giving the wealth to BlackRock, you can boycott BlackRock by owning it in self-custody. And you have the simple life where you can engage in more meaningful things, knowing that historically you've been outperformed just by buying every month whatever the price is. You've outperformed every hedge fund or real estate, gold, every commodity, every stock, every index, and you don't feed the beast. And you don't need to engage in any debt as well. So it's a gift for those that are engaging in the fiat currency debt-based Ponzi scheme called proof of weapons, which indirectly means that you're funding wars and all sorts of stuff that, if you understood what was happening with your debt and the impact it had on people in this perpetual debt cycle, you may want to exit and boycott the system as well. So in all this to say, please don't buy this junk. I'm not saying you won't get money out of a quick pump and dump. I leave all the gambling personally. There is more than enough returns in Bitcoin. I can't give you financial advice. I can't promise the future. But ever since $3, I've been telling people own more Bitcoin this month than the previous month. And I'm surrounded by billionaires that have come from an activist group that are now making meaningful difference in the world as they utilize their Bitcoin in order to actually make the changes that people are able to make, whether it be lobby or whether it be meaningful impact on share prices and deciding how to allocate your money, rather than just handing it over to the fund managers that prop up this debt-based proof of weapons violent system that is requiring more war right now in order to print fake GDP. We'll cover more of this in the macro section when we cover the big, beautiful bill. The moral of the story is that companies are basically choosing to own Bitcoin as their treasury, and in some cases they may be doing that over actually performing the activity that they historically performed, because all of this artificial intelligence, all of these robotics, and all of this economy that we are moving to, I think more and more people are starting to see that AI and robotics could disrupt pretty much everything as we know it today. So I believe that a bunch of companies that are going to be hedging against artificial intelligence, against robotics, will be taking the fiat currency that they already have, the cash flow while it lasts, and hedging themselves against disruption, and by putting Bitcoin on their balance sheet. And then we're going to get this really interesting two-tiered economy between those that own Bitcoin. And guess what is the most likely currency that artificial intelligence and agents will end up choosing? The programmatic one, the digital one, the one that they can't disrupt until a quantum computer comes along, and the community is already adjusting to that quantum reality as well. I covered more about that on the why, the objections around Bitcoin. Won't go through that right now. More public companies, Truth Social, Donald Trump's company, it made a formal filing for its Bitcoin ETF after stating that it would be raising billions of dollars in order to buy Bitcoin, after its sister company, World Liberty Financial, also issued billions of dollars in a stable coin backed by deals in the Middle East in order to earn yield off the higher yield. Basically, stable coins, you put your dollars in, you get a digital version of a dollar that you can send globally, and then the issuer gets to reinvest that into government debt like treasuries. And so the Trump administration, from a $2 billion deal, can earn $60 million for World Liberty Financial and his group of companies. And guess who's negotiating deals with the Middle East? Steve Witkoff, who is also a shareholder in World Liberty Financial. Now, Truth, the Truth Social media company, has been filing to issue its own Bitcoin ETF. Meanwhile, in TradFi, BlackRock, I believe the creator of the Operation Choke Point 2.0 mission to take down some of the crypto industry so that it could get its own Bitcoin BlackRock ETF approved, HitBit. It has now basically seeing this month record intakes into its ETF. So for this month, there was an inflow of $6.35 billion that was used in order to accumulate Bitcoin exposure via the Bitcoin exchange traded fund. So this is people that have money in traditional pensions, those that run big portfolios. They have been converting some of their stocks, their investments, their fiat currency into Bitcoin via these Bitcoin ETFs. And we started to, so there is billions and billions of dollars, and it was the highest it's been in May. We also saw talking about Jeffrey Epstein. Jeffrey Epstein's banker, the one that settled millions of dollars with victims of Jeffrey Epstein in very large settlement trades. The one headed up by Jamie Dimon all over the Epstein files. All of the different bankers that we've seen, if anyone has been following the Epstein files. So the $3.6 trillion asset manager, JP Morgan, it is starting to accept Bitcoin and crypto ETFs as collateral for loans. So what is the play here? It's obviously not JP Morgan Chase, the retail bank, allowing you to deposit your Bitcoin and then you can borrow against it as collateral, while that may eventually happen. This is more of the corporate treasury that is realizing that all these people that are putting Bitcoin on their balance sheet, maybe they can incentivize them to own it with Bitcoin BlackRock ETF instead. And then you can use that BlackRock Bitcoin ETF to borrow more Bitcoin. And when you borrow dollars from JP Morgan, and then they'll take that dollars and they'll buy more Bitcoin, then borrow against that in their Bitcoin ETF, and then borrow against that and create this crazy scheme that we saw throughout 2022 that creates the speculative cycle that people are getting over and over leveraged. And they may even do it with the leveraged Bitcoin ETF. So this is what TradFi does. Now, it doesn't change anything about Bitcoin because Bitcoin was built on proof of work. Proof of work means that it doesn't matter who owns it, and you can own it in self-custody, where you own your own money, spend your own money, and you don't need to engage in these elaborate products that TradFi will be using in order to engineer some kind of pump and dump at some point, because they need your Bitcoin, because they're invested in the global multipolar world that I've been discussing on many previous episodes of Bitcoin Hard Talk, that Trump, that works for the banks, is delivering through its tariff policies. More on that in the macro section. Now, what other announcements did we have this week? We saw Ross Ulbricht. He published some of his wallet addresses. We know some of his wallet addresses when the community was funding his lawsuits, his legal defense, and eventually Trump did a presidential pardon of Ross Ulbricht, the creator of Silk Road. We saw that it received 300 Bitcoin donation, approximately over $30 million. Now, immediately we publish that and you can track it. And the obvious question comes to mind, did he donate that to himself, as he is framing that as a Bitcoin donation? We will never really know because Bitcoin is pseudonymous. You can see once you identify a wallet address, you can have as many wallets as you want. You can identify that as yours, which is what was done when he was raising, and suddenly 300 Bitcoin comes in. Now, it's either a very generous person or it is somebody that has been sent that across to himself. Now it's a donation. You do the maths and you start to think about what that actually means. Right. Now, speaking of not just the corporations, what about at the state level? Well, at the state level within America, California just set to pass a bill which allows them to seize Bitcoin that is left idle on exchanges after approximately 3 years of basically inactivity. So what they're trying to do here is, if you're in California and you sign up to an exchange and it is maybe registered with the state of California as one of its money service licenses, and you don't log in and you don't do KYC request for up to 3 years or something, and they can prove inactivity, then they can just quite frankly, seize your Bitcoin. So assets can directly be taken by the state under what's called an unclaimed property law that exists within the state of California. So the bill has now heads to the Senate. It has been passed by Congress, and I think it's trying to be approved by Senate now. And so what this is coming after is when you pass away, inactive, whenever those things, they get their free Bitcoin. And this is their Bitcoin strategic reserve strategy. They can pass a Bitcoin strategic reserve strategy, which says they don't need to sell it. They can hold it on their state balance sheet, and they can steal it from you. This is the remnants of the 1933 default that America did, where it asked everybody to hand in their gold for approximately $30. But here's a neo version of it. You can use inactivity laws to creep towards that, where California state can build their own Bitcoin strategic reserves, not by buying it, not by doing it legitimately, but through confiscation. So everybody wants your Bitcoin. How do you protect yourself from that? Own it in self-custody. That is not going to be an inactive self-custody wallet address. That is going to be based upon you storing your Bitcoin, what they classify as inactive. And obviously, if you live in California, you need to make sure that you understand what's happening on that. On the election side, the different types of politics that's happening, if you're tracking where countries are going with Bitcoin, we had a pro-Bitcoin president, basically a new presidential candidate. I think his name is, sorry if I butcher this name, Nawrocki. He just won the Polish election within Europe. So we'll see, can Poland, which is one of the more fast-growing countries within Europe, they had to take in a lot of Ukrainian immigrants. And there has been a lot of crime ratcheting up there as part of the strategic weakening campaigns. I uploaded a video to this week around manufacturing civil unrest. Really important message. Head over to, if you're not watching this on YouTube, make sure you go back and watch that video. I cut it out of a previous episode, but I want you to understand why there is so much civil unrest and how it is being manufactured in order to use that civil unrest to usher in a surveillance state. And this is happening across Europe, across UK, and it will be coming to America as well. And so we shall see what happens in the Polish side. I recommend all European countries to be building their Bitcoin strategic reserve, because BlackRock and the other members of the proof of weapons network, the investment banks, the military companies, the technocracies, the consumer-based companies, they have been engaged in a strategic weakening. Now they have the European Union and the European Central Bank as tools to weaponize against the European and the British people. And now governments no longer serve their people. They serve the corporate agenda of those that basically our politicians are controlled by. Meanwhile, over in Asia, across the other side of the world, South Korea, they just elected a pro-Bitcoin president as well, after they had all of that drama around the, the martial law. I'm sure a coordinated operation to strategically weaken South Korea that led to the protests and the unrest that came from that. And suddenly you get a regime change. And so you'll notice that we're getting all of these regime change operations in order to move across to pro-Bitcoin candidates and the whole far right side, whatever you want to call that, so that they can ratchet up the civil unrest campaigns around the narratives of anti-immigration. And I'm not taking a political view. I believe all legal immigration should be done. People should understand what these policies are for. For example, in US, they're very deliberately having a strategy of Silicon Valley companies hiring Indian immigrants through H-1B visas in order to build new technology, AI, and agents to replace the workforce of those American workers. There are very strategic elements of what these are. And obviously, they can ratchet up the narrative to make you blame them so that they can create the civil unrest, so that they can introduce the laws to change that. But anyway, there was the South Korean new prime minister. He made a promise within the campaign to legalize Bitcoin ETFs and set up a fair, move some of the unfair regulations. If you don't know the history of investing in South Korea, there are very, very strict, tight controls on what you can invest in. And so they want you to invest in real estate and various other things. And the reason that there was a massive, what we called the kimchi premium during the ICO bubble, where many in South Korea were investing in many of these token sales, and there was a massive premium for Bitcoin that was people were arbitraging between if they could get money into South Korea via Japanese banks and various other things. There was a way of arbitraging the price differential because South Korea, through these tight investment restrictions, they're not able to invest in what they want, and they were able to invest in these tokens outside of the financial system. It created a speculative bubble, but there is looking like there may be an opening up of the market and the unwinding of some of these restrictive regulations that might stop people being able to invest in Bitcoin. Why? Because they'd rather you do it via their bank, via their ETF product. You can see that this is coordinated action to try and get it where you own Bitcoin with them so that they can protect themselves as we transition to this multipolar world order. We saw in Romania, the largest postal services in Romania is going to be selling Bitcoin directly from the post offices. And they were saying that they said Bitcoin and crypto at over approximately 5,000 locations. So in Romania, you can go to your post office and purchase that Bitcoin at approximately 5,000 locations. Meantime, over on the BRICS side, Russia announced that it's going to be using their biggest state-controlled bank and their lender, which is Spenbank, and they're going to be launching a Bitcoin structured bond. What that essentially means is that if you invest in this Bitcoin structured bond, the issuer will be having the Bitcoin exposure, and most likely they will be guaranteeing a yield on that bond. They get to keep the upside while they guarantee that they can pay the yield on that bond. And so basically the bond holder and bond issuer, the state-controlled bank within Russia, is looking to increase their Bitcoin exposure while they issue these different bonds. And this could be done at the sovereign level, where they can maybe, we don't know the exact yield that they will be paying for this structure, but essentially it is a bet on Bitcoin that it will outperform, and they can guarantee a yield, and then they'll do all sorts of things. Maybe they'll borrow against that Bitcoin as collateral, and then they'll hedge some of the currency risk. That's what a structured product means. And they're going to be planning to list these Bitcoin bonds as structured products on the Moscow Stock Exchange. At the same time, Russia's Moscow Stock Exchange actually launched and started trading in Bitcoin futures. So you can see that they're setting up the Bitcoin products that they need in order to issue more bonds using Bitcoin. And you can bet your bottom dollar that the largest purchaser of those bonds will in fact be China in the BRICS corridor. And this could be how BRICS, where Russia has been mining Bitcoin all this time quietly, has built its Bitcoin strategic reserve, is now issuing Bitcoin bonds, listing them on the Moscow Stock Exchange, making a market where China can trade with Russia, India, South Africa, Iran, Egypt, and various other members like Indonesia. They're able to trade with each other without the dollar, which ushers in the potential highest performing bonds that pay the highest yield because they're backed by Bitcoin, which fundamentally changes the market, opens up the game theory for other countries to start issuing bonds against Bitcoin, and hyper accelerates the journey of maybe states in America doing Bitcoin bonds. Maybe some of these corporate treasury companies doing Bitcoin backed junk bonds. You can see where this is all going. Again, I don't recommend any of these financial products, but you can see how we bottom up get a Bitcoin standard by this sovereign adoption, corporate adoption, individual adoption, and we can move towards this bottom up peaceful Bitcoin standard where people can create these financial products as well. And so is it just coincidentally that a Chinese think tank came out and said that Bitcoin is transforming from a speculative asset to a strategic reserve asset? Is it also a coincidence that the organizations like the International Monetary Fund, which is essentially a global bank that has the largest member, the largest voting member, the largest contributor, US, which acts as a US corporate interest proxy, may also be deviating, as America and Elon Musk are asking, to defund some of these United Nations International Monetary Fund contributions, which weakens American soft power, shrinks it to a regional power. But at the same time, the IMF is still saying that it's raised concerns, just like it did over the El Salvador Bitcoin strategy. It's now said that it has red flags over Pakistan's announcement that is going to be building a Bitcoin mining plan where they're going to be allocating 2,000 megawatts or whatever it may be towards Bitcoin mining to build their Bitcoin strategic reserves. You are starting to see at the highest level that the game theory is playing out. And so you can see, again, I reiterate, I don't believe that these are products that maybe some people, these are the corporate products, these are the structured products. This is where the manipulators come in and they try and create a complex in order to scam you out of your Bitcoin and manipulate price, create margin calls, all the stuff I covered in previous videos. But this is the bottom-up Bitcoin standard that is being built because as we go through in the macro section, there are serious concerns about America's credit rating right now and America's strategy to refinance its debt. And so with that now, we're going to be going over to part 2, which is this week in macro. But that is everything that happened this week in Bitcoin. And what I'd like you to do, I'm going to take a quick water break as we go through to the next section. But this week in macro, we're going to be covering how macro has become a Jerry Springer show, how it relates to Musk, the public war between Musk and Trump, how that relates to the big bill, how that relates to the macro section, Jeffrey Epstein and Palantir, and some of the competitions for a social credit score that's being built on the macro side. So it's going to be a little bit of politics, movement at the micro level, but at the macro trends as well. Now, what I'd love for you to do, we are almost at 100,000 subscribers on YouTube. Thank you so much for everybody that subscribed. We had about 10,000 subscribers approximately over the last couple of episodes. As soon as I get to 100,000 subscribers, we're going to be able to get this message out to more and more people. We're going to be able to get my content reviewed by YouTube, and we can then push the algorithms with a blue check, and we can reach more people because time is running out for people to protect themselves in this transition that we are experiencing of a world of Bitcoin, AI, and central bank digital currencies. And I don't want your family and your loved ones to be on the wrong side of CBDCs. I want them to be sovereign with Bitcoin. So what that means is please subscribe to the channel, help me get above 100K. We can get that review. Now, if during that review they decide to censor me because we had a shadow ban for many years, which seems to have been lifted now that we got this spike in subscribers, we're backing up everything on Rumble. And so if you're on Rumble, we're live there as well. head over to Rumble, follow me over there, because if anything goes wrong with that review, we'll be moving to Rumble. And in case Rumble goes wrong, we back everything up onto our own server at the Bitcoin Hard Talk membership portal. There you can get additional videos that are no longer available anywhere else, like the Great Depression of the 2020 video series, where I got everyone ahead of this and all of these trends. And also a digital copy of the first published book in the world to include Bitcoin that I wrote in 2011 that predicted and got people ahead for many of the things that are happening right now. So get yourself a free membership portal at Bitcoin Hard Talk. The Bitcoin Hard Talk membership portal, which is available at simondixon.com. And also, one final thing, head over to Apple Podcasts. If you can't watch this whole thing in one go, or you want to do it while you're at the gym or while you're driving, you can download it on Spotify and Apple Podcasts, and you can have it automatically downloaded and watch at your own time by following me over on those podcasts. So please take that action right now. And at the very least, repost if you're on X, share this across YouTube and share this with your family. I'm going to take a quick water, and then we're going to do part 2 this week in macro.